Good evening, Wizards. Coming from myself, the Wizard platform, and this beautiful BTC chart that we have presented in front of us today. Apologies for the slight delay in the breakdown. I wanted to wait for the 4-hour candle closure, which, as you can see, has now finally closed, which has enabled us to now go for a bit more of an in-depth and more precise analytical breakdown of the market. So where to begin, where to start, and what to actually go over. And I think the first thing to actually cover is the necessity of understanding the art of patience. I think before we can even get into the charts, again, just to kickstart and let you guys know, the art of patience is very crucial when it comes to cryptocurrency investments. Now, for the majority of the past few weeks, especially whilst BTC has been lingering around this region, everyone saw the floor that was forming here. And even myself, I wasn't really involved in the market too much. I purposely chose to stay very quiet. Now, the reason I stay quiet, as you guys know, if I do go a bit more silent on the calls or the analysis, or I do not give too many projections, then it's because I do not want you guys over trading, over leveraging, or doing anything stupid. And the reason I do that is because when there's no trade opportunity present, then you should not be trading. Therefore, if we go to, let's just say, the 1 hour time frame, when we were all the way up at this region here, if you go to the 1 hour, I mean, yeah, there were some good movements, but overall the profitability was not too good. Even the XRP movement, we could have got a bit more out of it, but it was slammed down just in the nick of time before we moved, after we moved our stop losses into break even. So it's all about understanding in retrospect, going for the bigger moves versus the smaller moves. And a good example today would have been the BTC trade, which, as I literally tweeted yesterday and posted in Telegram, which if we go over to here, we'll show you exactly that now. All focus remains on 8,500 BTC next. I also see prices coming back to flirt with the $8,000 zone at the bare minimum before identifying any form of parabolic burst to the upside. And of course, more to follow in the breakdown. If you did watch the breakdown, you would know I've called these exact regions. And all I've done from there is just clean up the charts a lot more, keep it more simplistic and more easy to understand. But the main point of this is to understand that even this breakdown overall is that, guys, everyone on Twitter screaming bullish. Everyone saw a breakout, bullish, 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 bullish. But what did the Wizards do yet again? We keep the $6,000 region open. We understand there's going to be a pullback. This is what wipes out every single person. And this is what it's like to have laser sharp reactions to the market. Even when we took the profits off the BTC spike up to there, my goodness, that monthly looks good. And we'll get to that monthly candle in a very short second as well. But understanding even this little push here, it wasn't really anything significant, especially on a daily perspective. But overall, catching this movement, this breakout from here, it was still a very nice movement from 30 up to almost 31.5 cents. So a decent little move on that end as well. But the main thing to understand here is, even though we broke the 30 cents region, this was already covered as a potential wick fish. We did not annihilate the prior highs or the prior level of resistance over here. So all in all, by understanding the bigger picture, because if you were on the shorter term time frames and you were looking at all of these candle closures here, I mean, the breaks through 30 cents, you would have thought, oh my God, we've broken through, it's time to strike. But in reality, it was just a manipulative wick fish. Bang, back down, bang again. Wick fish through, boom, all the way back down to the initial downside projected regions. And it just goes to show, when you can filter out all of the rubbish, all of the noise, and what everyone else is saying in the market, sticking to your own bias, you will always end up the most profitable trader and the most successful. Now, what I do from time to time, if I do see some projections, let's just say retweeted onto my timeline, I'll do a bit of investigation. I may go a bit further into that particular person's profile, or I may start searching. I may even go into the tweet bar or the little search bar on Twitter and just search certain price points and see what people are saying. And in general, what I do from there onwards is look at the charts. I stick to my initial bias, and I understand that if I'm still aiming for a potential downside push, even at the bare minimum to around 26 to 25 cents, I think that's absolutely more than reasonable to see that movement come down yet again before dictating what the market will do next. I think that's more than reasonable, and I'll be getting into that in a very short second as well. But the overall gist here is to just understand how I trade, how I work, and how it's very different to how the majority operate. And that's why during periods where there's confusion in the market, it may look like I'm being quiet. It may look like I not know what I'm doing. It may look like I'm adjusting and changing biases overall, but that's because I'm preparing. I'm getting both sides of the bias. I'm understanding which one's more favorable, and then we optimize for that. When the market shows confusion, I will not tell you there is a setup, because if I'm confused and I don't know what the market's about to do next, then why on earth would I tell you what to do next? And that is exactly why I stay silent, because no matter what people tell you, there's this big agenda, or this big, I guess you could say, bias or a perspective that every single analyst in the world, or anyone that has been trading for a very long time, or is remarkably successful in any means necessary in trading, there seems to be this weird bias that we know every single thing the market is doing next. And whilst I can happily admit I have a very high hit rate and a very high profitability rate, it does not mean I know what the market is doing 24/7. When the market is confusing, that means if you're confused, I'm just as confused as you are. But what I do during those moments, and this is what makes or breaks your profitability over the long term as well, when I'm confused and the market does not show me a clear setup, I do everything in my power to stay away from the market. I then go from a trader to an analyst and an observer. I start doing the fundamentals, I start doing the technicals, and I start overall understanding the market before making the next move. This is what will make or break your trading. And whilst everyone here was looking at the intraday wicks that were breaking through, I was looking at the daily and weekly wicks and understanding no matter what happens, we were still within the zone. And as I said, below 30 cents, we're going to be bearish. If we're above 30 cents, we're going to be bullish. But people take that literally and then look at, let's just say, even I clicked on the 45 by accident, people look at this. Huge breakthrough. Oh my God, 40 cents next, 50 cents next, go, 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 go. Absolutely not. You have to be patient and understand if the higher time frames are not fulfilling these formations, even the 4 hour, that doesn't count to me, because we knew this was going to happen. Huge upside movement, 0.315, boom, all the way back down. And we're now fulfilling this level quite nicely. The nice region here, 61.8, which I'll be getting to in a second as well. Before I get into the counter arguments for the overall bias, we're just running through the actual trade setups themselves first. So just to clear up again, if you are new, just so you understand how I operate, how I work, and understand that by just being patient and letting the market come to you, your opportunities for profitability will become much larger. It'll be a lot less stressful. And whilst everyone on Twitter screaming, oh God, this, that, we were just sitting there quietly behind the scenes, waiting for the market to go in our favor. And yet again, not many people expected to see this downside movement. So I'm very glad that all of you guys have profited from this as well. I couldn't even capture it myself, which was unfortunate as I was working on the platform, but that doesn't matter because you guys have made a profit. I've seen more than enough on the Instagram being sent through to me, on Twitter as well. So just remember, whenever you guys make a profit off the trades, just send it through. You get the recognition you deserve, because it's not just about taking calls and copying them. At the end of the day, I see trading in this manner. If you've gone out of your way to risk your hard-earned money by utilizing a skill set that you're either trying to learn or have learnt, and you've put man hours into, you are working hard. That is hard work in my opinion. Now, when it comes to trading, in terms of comparing it to labor or some kind of intensive man-handling role, it's not really going to seem too intensive or stressful. But mentally, strategically, the amount of planning and hard work and hours and eye-burning hours that go into watching a chart, you more than deserve the recognition for getting a successful trade come through. So to understand this in perspective, let's just cover BTC first in a bit more depth and understand what's going on as well, because the same theory applies with the $9,600 region. So I believe it was over here. On the 1 hour, you can see this short-term breakout, huge burst of manipulation. And anyone that was monitoring the 4 hour or even the 1 hour, they would have seen that breakthrough, seen what I said, and probably thought, oh my goodness, it's time for the bull run. But the truth is, if you're watching this time frame for anything other than trade execution, you are really wasting your time. You are just spending hours watching candles do anything and everything. And unless you're scalping or intraday trading, then there's no real point watching the 1 hour time frame until you've gone from a top to bottom, top down analysis outlook. And as I said earlier, I can even go into a 5-minute time frame if I really need to as well, just to really refine and understand the price action on a nitty gritty level. But going back to the 4 hour, what happened upon that candle breakout? We slammed straight back down. So there you can see we broke through, slammed back down, broke through again, little rejection, bang, back down, final retest, boom to the downside. So although BTC did fail to make that extra push towards this region over here, I'm more than happy to see this trend line break come through. So understanding how this all comes into play and understanding what is actually going on here. There was a CME futures gap that was made the other day at $8,500 with a surprise slump. So already I had a bit of an understanding that $8,500 yet again might have been a good region of interest. But then I looked into it deeper and I used my own analysis in line with what I was seeing in the fundamental news to gather an overall picture and make this call even more precise. So how did I know $8,500 and how did I know to even capture this specific region here? The first thing to mention is of course the resistance level that was broken. As I covered in some prior breakdowns as well, this level here, once broken, came back down, rejected as support, which we've seen pinpoint accuracy as of today. Pinpoint on that candle as well, the body closures, boom, we've tapped this region again. So we've wiped out the $9,200 floor and fulfilled this overall movement. And this is the only real conflict right now alongside the trend line that could actually potentially stop us from moving into the $6,000s or $5,000 region, something I'll also be preparing you for in a second as well. But the overall gist here is, if we do go from a top-down analysis perspective, I even gave you the short opportunity down to this zone as well. So when we look at this overall from the monthly, we can see the overall head and shoulders is formulated here. The shoulders, the head, the potential shoulders. It is all looking pretty good and solid to plan. And I've marked that out for the 1st of January as well, just to extend us all the way out to 2020. But the overall gist here is, just as we broke through on the 4-hour, just as we broke through this and came back to retest, you're essentially seeing this on a weekly perspective as well, or a monthly perspective. We've broken through this floor here. We've also broken through this floor over here as well. So all you're really seeing right now is a break and a retest and potentially a continuation higher, which is why we have to take this $8,000 floor into massive consideration, because it's broken, rejection, and it's holding quite nicely. But on the contrary, we still have that movement all the way down from here. You've got the trend line as well. And I do believe there should be that surprise fish down to $6,000 at the bare minimum. And if I do just drag that back down to where we were, it makes perfect sense to see that extra movement lower, especially when you consider the wicks have been descending. Every single wick has gone lower. Lower lows, lower highs. We are slowly correcting and slowly retracing. As we break through a level of support, we come back and retest it and hopefully pull back lower as well. Not to mention the downside wicks are also rejecting around this region. This wick over here has been broken by this wick ever so slightly. So all indicators right now are pointing to a much more bearish bias. Now, here's where the counteractive argument does come into play, because at the end of the day, not only we've broken through resistance and now acts as support, we're also rejecting the trend line over here, which I could draw in two ways, and I'll show you from wick to wick. It also aligns perfectly. Huge failure to break above this zone. Resistance trend line holding. 3 descending wicks, which also form, by the looks of it, a pretty good trend line as well. So 1, 2, 3 wicks on a trend line over there. Rejection, taps this level one more time, and boom. And you will recollect in the past 2 videos I've made, I actually gave the short call from this region as well, where I said we've come through, we've rejected one more time to test this region for validity, and we should continue lower. So if you did follow the overall analysis, you'll understand this is all coming into play right now. And here's where things are going to get a bit more interesting for yourselves, because the weekly is what's painting the overall picture for me. As you can see, swing low, up, back down, swing low, up, back down. It's forming a nice channel, and I do not know if this will be perfect, but if I was to make some form of channel from this or out of this, you can understand we're still within the boundaries of this channel, which if I extended this all the way out from there to there, what you would see happening is a potential pull down to retest this trend line once more, also fulfill the 61.8, also fulfill the overall long-term Fibonacci as well, which I'll get up for you right now. Very precise monthly Fibonacci from wick to wick. And would you look at that, from month to month, we can see $6,250 and also $5,000. The same Fibonacci I had marked up from the very moment we started reversing from this $14,000 region. And if you look at the extensions, $12,500, absolutely perfect, and $15,500, which we should see meet the $16,000 region upon the final rejection. Now, understanding that everything you're seeing on this intraday level is overall forming a bigger picture for the higher time frames, then all you need to understand from here onwards is that any form of movement lower is only going to fulfill the overall long-term Fibonacci's. We have a massive Fibonacci here on the monthly that has not been fulfilled, which obviously, when looking at a longer term perspective, will very likely become filled. So when you work and understand that everything you see here and do is working to overall fulfill the bigger picture storyline, you can trade the intraday timeframes and do any other movement in line with the overall bigger picture. And the overall bigger picture for me right now is very clearly saying there's open space here, there's a channel that's descending. We test this trend line, we drop down to the weekly. We break through this trend line, we then retest this trend line, and we start elevating towards our Fibonacci targets to the upside. It cannot get any simpler or any cleaner than that. And I'm also trying my absolute best right now to make this as clear as possible for all of you. Until, guys, you've actually seen, you have to understand, a lot of the stuff I'm doing here, I'm trying to break this down as simplistic as possible without actually giving away absolutely everything. Because the truth is, once you've seen the course contents and the book within the platform, if you understand this already, then once you've actually gained content, so once you've actually gained access to the content, it's just going to be so easy for yourself. So if you feel like this is already helping, just wait until the full package is there. I obviously cannot give away everything, so there are times where what I'm saying may be a bit confusing to yourselves, but once you've got the course and the platform, you'll be very understanding of exactly what I'm on about. So let's go over to the daily now and have a little look at this in a bit more depth. So again, the only real counteraction is if I actually, switch back to the weekly, fix this trend line to the wick to body, because as you know, we like to cheat with our trend lines when it comes to cryptocurrency. You can see that we haven't actually fulfilled the trend line retest yet, and obviously before we can even consider going long, we need to see some form of rejection. We've seen the first region breached, resistance turned support, but what about the trend line retest also aligning with the $8,000 to 7,750 region, that head and shoulders as well, the shoulders, the head, potential shoulders, which could confluence and align exactly with this trend line crossover over here as well. So that's looking very good in my opinion, very promising. Not to mention, if I do draw this from there to there, we can also see the 61.8 perfectly aligned with 8,500, around 8,541 to be precise, but overall $8,500 zone just here. 61.8 has not yet been fulfilled, 78.6 exactly at $8,000 at our highlighted region. Drop this Fibonacci lower from wick to body, pinpoint precision on our zone around 7.8, 8,200 then comes into play. So what this means is if we do not actually tap down and reject this trend line now, we need to start preparing for an intraday pullback, which for me, very simply, very easily, very key region here around $9,000, obviously crucial psychological level of support that's broken, and of course $9,200, because once you go to the daily, this was a prior level of support which price couldn't break. We've absolutely melted. This is what tricked everyone to go long. When we saw this pullback yesterday, I knew this was going to absolutely die. Saw the breakthrough. Now we can look at a potential retest of anywhere from 9,000 to 9,200 before inevitably continuing this lower to retest the trend line and bounce and fulfill the $8,000 region at the bare minimum. So we've technically already fulfilled target one around 8.5, although I would like to see an extra push or some form of wick fishing. We have already fulfilled that target, so it's a very good sign to see so far. Again, this is the only obstacle that's holding us back, and if I was to go long on this particular setup or opportunity, then you would just be waiting for the 78.6 wick fishing over here, head and shoulders. Make sure that doesn't get wiped out. Your stop loss could be safely below this, because to be honest with you, if it breaks the head anyway, it's not going to pan out as anticipated. So very nice risk to reward of that setup alone. It really reminds me of that prior price action we saw around, I believe it was this movement here. I think it was this particular trade or this setup. Again, the movement up to around $11,000. We're looking at a very similar movement, but it could be happening on a much more grander scale. So ignore the daily outlook for this right now. I know this has fulfilled pretty precisely, especially if I draw that out to there. You can see we've already filled the trend line on this region as well. But from a weekly perspective, there is a little bit of room to fall lower. And this is the only real conflict for me right now. And that's why it's in our best interest, if you've taken this trade, to at least take some profits off the table and move your stop loss into break even or profit as well. The reason being is when you combine this factor from a daily perspective and the fact we've broken resistance turn support, that's a very perfect confluence that I was hoping to see down here instead. So by doing so, you can actually either take a hedge trade to go against your existing short, or you can simply close all the profits out now and take all the profits you can, and then ride an intraday long opportunity up towards the $9,200 region to make an extra profit. From there, we can dictate whether or not this will be a final testing ground for the pair. But overall, that head and shoulders for me looks like it should be fulfilled one more time. We've seen it time and time again: breakthrough, come back down, reject, reject, reject. Let's hope we can see this one more time. So hoping this all pans out well. Let's have another quick look at XRP just to understand. For me, the same head and shoulders region, which is just marked out over there. Let's get rid of the fibs. The fibs have all been working out very well anyway. So Considering we had 3 Fibonacci set up on this overall setup as well, all 3 Fibonacci's aligned with this exact region where the wick fishing occurred, all the way down to around 30 cents. So we're looking at around 1 cent overall for 3 Fibonacci 78.6s to confluence in synchronization with each other. So that all in all is looking very good as well, and the same theory applies. I did just look at this, and I do believe we could be seeing a very small intraday opportunity coming up where XRP should be coming back down to reject and retest the 29.5 to 30 cents region. Now, should we see that come through, guys, it doesn't take a guru or a genius to know that one is going to be a very simple trendline break and retest before potentially continuing down to the 25 cent zone, which would also put BTC into that category of $8,000 again. So it's nice to see some symmetry across both pairs. Rejection of resistance, which was obviously a support term resistance, come back down, fulfill this real zone over here, which, if we drag it down to there to show even clearer, could end up being this movement here, which then booms us as we start ending 2020. Overall, downside biases are not wiped out just yet. $6,000 and $5,000, still very open possibilities. We are not far away at all. All it takes is one single movement. Looking at all of this, I don't care if it's a breakout or whatever, lower highs are being formed, lower lows are also being formed. All it takes is one sharp sudden movement to take us into this region, and boom, a huge upside catalyst. XRP a little bit more choppy, but overall lower highs 1, 2, 3, 4, 5, and lower lows also forming. So that means the next low could even dip us into that region as well, something I'm very prepared for. Understanding this overall, I do believe a big region of interest in this particular instance is this region here, around 18 to 16 cents. We could even dip that down to 15. That zone there we can leave marked out for future possibilities. Of course, maybe not even for 2020, but overall, let's mark it from where the current price action is. Anywhere from around 15 to 18 cents, you've got a 3 cent range where any sharp, sudden, surprising movements could happen. And I truly believe before the next bull run occurs, again, just mentioning the wick fishing as well, the perfection. In fact, I said this was not a valid retest. We needed the real retest to come through first. We failed to break through. We came back up. We rejected. We saw the wick fishing. We've proven this level is now valid. Breakthrough, support, term resistance, roll over to the next potential target. Fulfill the next potential target, which would shake out the majority of investors. Once we've shaken out the majority of investors, the market begins to boom. Institutions and the majority of the world who are now taking cryptocurrency a lot more seriously than the 2017 speculative manner. Sorry, that was a mess up over there. I don't know what just came out my mouth there. Speculative? Interesting, very interesting. I'm clearly too entwined in the charts right now, but you get the gist. You do get the gist, and hopefully you understand now why this bigger picture is making sense, why the monthly and the weeklies are the guidance right now. And even if we do not push down and we just see 25 cents fulfilled or 26 cents, well, guess what? Look at this candle here. Look at this candle here. Look at this candle here. This looks incredibly similar to this over here. Now, what happened one last time? We rejected that exact level before booming to the sky. Now, that exact level for us would be located just below around 26 to 25 cents, which means all we need to do, if we do not maintain this level, if we see the pullback to this region and the candles start pulling back up, which we can monitor on the 4 hour or 1 hour, my goodness, you will probably catch the best long opportunity you will ever catch in your life if this level does maintain. I mean, imagine buying long there, and then the next parabolic bull run occurs. Because guess what? Although we are descending, although we are getting lower, the truth is, you know how this works. The trend lines that are forming, the counter trends, we have technically already breached some of these regions. There are all kinds of different ways to draw it on XRP. It's a very messy chart, to be honest with you. But if you look at it this way, from a daily perspective, we've technically already broken it. And now we could come back down one last time and reject it around 25 to 24 cents. And then boom, the next bull run actually occurs. Because for the time being, the biggest threat for us is the fact this trend line here is still currently holding. That's, you know, higher highs, higher lows forming. So I would like to ideally see some form of trickery, push up, push down, and boom. So even if those bonus targets are not fulfilled, it doesn't really matter, guys. Let's get rid of that trend line. Look at this over here. Look at this on the monthly. You can see very clearly now the trend line has given way, and it is looking like it's time very soon to blow through the roof once again. But as always, please be patient, please be calculated, and please understand no matter what you see right now, the market could still be doing a lot more where that came from. So be patient, don't let the market fool you, and understand. Wouldn't mind a little wick fishing over here actually, nice little entry to potentially catch. Let's just say we see a tap back down towards around 27.5 cents. I'll be looking to enter long on XRP again and riding a very short wave all the way back up to the 30 cents region where I'll be looking to go short. So I hope this has really clarified everything, made things a lot clearer, but please do understand the overall longer term picture, the trend lines, etc. Break, retest, boom. If I mark out this little bad boy as well, it's inevitable, as you can see. 61.8 at 25 and the 78.6 at 23.5. My goodness, the 61.8 plus the support level plus the trend line, plus we will not be breaking through that level. Boom, 40 cents next, nice and simple, and that would happen in a very fast manner. But to be honest with you, once we start breaking through these regions and we start breaking through 30 cents again, I'm more fixated on the likes of $1 next. So take that how you wish. Please do not get too excited, but do understand there are some incredibly exciting moments happening in this market right now. But before we see anything drastic, I think we need one last final shakeout for this market to take out absolutely everyone, and then we're going to see something truly revolutionary shifting into 2020. And not to mention the Wizard platform demo. Many of you guys have been asking about it, asking what's going on. It's coming very, very soon. All I need from you guys is to be fully posted and ready on all of the social media platforms. Now, you know the drill. That means YouTube subscribes. That means Twitter, Instagram, post notifications on. I need you guys ready because it will be limited to a very select few. So that means you have to be quick and make sure you are there at the time it's posted. And again, from there onwards, we'll be seeing what we can do from there for the rest of the individuals as well. But it's going to be limited, it's going to be exclusive, it's going to be exciting. So I need you guys prepared because it's limited, and you never know, you may see me on the platform on the demo with yourselves as well.